I must show you something wildly bullish that I totally missed.
And to do so, we're going to be taking a look at dragonflies, hammers, shooting stars, and Bitcoin pirates. Am I on the Discovery Channel or did I eat some of this cactus? Well, everything but pirates, but you still can't miss it. Are you ready? You better be. We're going to mix the overall macro time frame with the mid-macro range, and then take it all the way down to the small time frames, which it could be the initiator of it all. So where do you think I'm going to start? That's freaking right, bald baby, but don't break Stoner Joe's glasses. We're going to start with the low-end time frames to see how the bullish effects could cascade into the larger time frames and also flip them bullish for continuation on the weekly uptrend. Since Bitcoin's 69K top around November 10th, price has been stuck within a descending channel with one fake out to the upside. If you zoom into this part here, you can see that the yellow line, which is the 21 EMA of the 1 hour, crossed above the orange line, which is the 200 EMA of the hour, and Stokes down here were able to bottom out several times while holding this as support, while also its first push up within this rally was able to poke its head within the RSI bullish control zone twice and then use this as support multiple times as Stokes went down. That gives you an edge on trading to the upside. However, there was one bullish component missing. Flipping to the daily chart, during that consolidation, RSI only had lower lows on the daily chart. If you flip to the 12-hour chart, the same thing was present. And now that price is finally starting to do something very similar, you can see down here on the 12-hour RSI, we have a series of higher lows. And flipping to the daily, you also have a series of higher lows on the RSI. While none of those things existed over here, as we had previously zoomed in on the 1-hour chart when that bullish cross happened. So this is starting to look a heck of a lot better right now.
But don't get too excited, we're still in a daily downtrend.
I'm scared of pirates.
There are 3 types of trends. Currently, the daily trend is in a downtrend. In order to not be in a daily downtrend, price on spot trade charts need to close above these 2 candles here. Not get above those levels, but get above and stay above for the candle closure and the next one starts. And that level's coming in just shy of $49,000, more specifically $48,860. So once a closure over this happens on spot trade, then the daily trend will enter no trend territory while the weekly is still in an uptrend. And that would personally give me a slightly bullish bias. From a mid-macro standpoint, the one thing that concerns me is that spot trade charts have not hit this blue box in order to provide the bounce to get over this 5/8 line right here, because price broke below it and used it as resistance. So technically to get over it, you usually have to bounce here. However, there's something I missed. I made a blunder. Crap. On the CME chart, which is where the big boys come to play, this blue box was indeed tested on 3 different occasions with daily wicks. I will zoom in. Once, which is close enough, twice, thrice. Now there's permission to get above that line. And it's a good thing it has permission to get above this line, because in order for the daily downtrend to be broken and to enter no trend territory, the Bitcoin CME must close a daily at a higher point than what is on spot trade positions. This level right here is coming in at 49,350. So CME has to do a little bit more work, but typically CMEs run a little higher than spot trade anyway. So the main point is there is more hope that Bitcoin can enter a daily no trend with a weekly uptrend because it has permission to do so, because this box was hit. And there are Bitcoin analysts out there with much more experience than I have,
Although not nearly as cool.
who are adamant about the idea that CMEs typically lead spots. And when you see a large difference between the 2 charts, whether it's EMA crosses, closings of the dailies, etc., that whatever happens on the CME will more likely pull or tug Bitcoin on spot to do what CME's triggers are doing.
Keep your eyes open, because what I'm about to show you is hyper bullish.
So on spot trade charts, this bounce point has not been tested, but it has been on CMEs. But there's another more bullish thing that's happening on CMEs that is actually giving a bearish signal on spot, which means price on the spot trade chart might all be a bear trap. But before I show you,
Make sure you flip your phones or get flipped off. That means flip your phone vertically and very nicely hit the like button, especially returning viewers. That's what counts the most.
in my last video, I asked you all to take your little keyboard and turn your face and just type in a bunch of stuff and hit enter. Only one person did it. I think it was in Russian or Greek. I want to see more craziness down in the comment section. Let's confuse the hell out of new viewers. All that stuff helps me. Here's what helps you. If you subscribe and hit that bell, because the bell allows me to deliver time-sensitive information to you to help you have a more profitable crypto journey. We're in this together. Smash the bell, or you're going to step on a damn Lego. Now let's take a look at that one thing on the CME chart that actually says that this all might have been a bear trap. Follow me on Twitter, 𝘾𝙤𝙣𝙣𝙤. Turn on your microphone and camera and ask me questions directly and live. Links to the Discord community in the description section. Not a fan of online communities? No problem. Hit the join button below this to watch a video on what the YouTube tiers offer. So we all know that this type of cross is bad on the daily chart. Daily 10 crossing below the orange daily 200. It has very nasty effects. But guess what's not happening on the CME Big Boy chart? It hasn't happened yet. Let's zoom in. Ta-da! But on the majority of spot trade charts, not only has it crossed, but also there was a massive rejection with this candle from this cross as price zoomed into it to try to undo it. And then after that rejection, the daily 10 EMA was another rejection, another rejection, another rejection. And none of that crap happened on CMEs. So again, you have the bounce point that was never hit on spot trade plus a bearish cross. But on the CME chart, you have the bounce point was hit and you never got an EMA bearish cross. What the hell is going on? Well, there are two options. A, it's just a coincidence due to the natural difference in price between CMEs and spot trade. Or maybe there are big players in the markets who are trapping people on purpose, trying to get shorters to become more aggressive, which the analytics say is actually now true. And because more people take on shorts, that allows those same people who are massaging spot trade price to take on more longs because they can't take on more longs if more people don't short. Stoner Joe, pass me that. Probably just a coincidence, huh? Now let's take a look at how this could cascade into the larger time frames. Quick lesson on candlestick formations. This is the monthly chart. Candlesticks can be interpreted on any time frame. However, the larger the time frame, the more powerful it is. In addition to how large the time frame is, what makes it more powerful in my personal interpretation of candlestick formations is how far from the major EMA on that time frame that price finds itself, and or if there is a range or consolidation period, how price interacts with that candlestick formation relative to that EMA, whether it's a push off or a break below. So during major downtrends or major uptrends, I interpret candlestick formations, which offer insights on a potential reversal, to be more powerful if price is farther away from the master EMA of that time frame, often the 10 EMA, particularly to the month. Or what we have currently is we are in a long range since February. I try to give more power or emphasis to candlestick formations based off of the repulsion up off of that major EMA or the weakness with which it approaches the EMA or breaks below it or gets rejected by it. But in this case, these lower time frame EMAs could spell a repulsion up and away from that 10 EMA, which is the red line. I'm going to fly through these, so feel free to pause the video at any time. Here are a couple of candles that we will be covering. Notice that the formation is exactly the same. The color really is irrelevant here. It's the position from after a downtrend or after an uptrend. Hammer and hanging man. Dragonfly dojis and gravestone dojis also have the exact same formation, but its orientation is flipped, both the candlestick formation itself and the position in which it finds itself from a downtrend to an uptrend. And also an inverted hammer at the bottom of a downtrend versus the same exact formation, the same exact orientation versus a shooting star pattern, which happens near the top of an uptrend. I tagged that section down below, so throughout this video, if you want to go back to that point real quick, feel free. You can notice that most textbook definitions of those candlesticks either use an aggressive uptrend with a reversal or an aggressive downtrend with a reversal, as opposed to identifying some type of consolidation point like this and offering textbook interpretations of how the candlesticks are, which is why I said the way I interpret them can be different, but always related to the master EMA or the most important EMA on that time frame. Going back to 2013, you had an aggressive uptrend with a spinning top monthly candle, which because of the distance away from that EMA during the uptrend would be interpreted as a bearish spinning top, a very likely sign of reversal. And then next you have a hanging man candle. You have a hanging man candle right here. So bearish shooting star followed by a bearish hanging man candle, which I don't have labeled. And then you had a 3-month downtrend. And you can see here, because this was during a downtrend, you got a hammer candle. Even without the EMA here, this would have been interpreted as bullish. But if you interpret this as a consolidation without taking into consideration this 60 to 80 day downtrend, because each of these candles is 30 days, I would have interpreted this within a consolidation as bullish as well, because it's repulsion from the monthly 10 EMA. Do you see this wick right here, how it repelled price up? Because this indicates that buyers stepped in to defend the crap out of this territory. And interpreting this as a range, I would conclude that this is more bullish because after roughly 80 days of a downtrend, the sellers are worn out and the buyers were confident and ready to step in. This next candle right here was technically a spinning top, but because it did not happen after a large uptrend or a large downtrend, it simply means indecision within the market within this context. Now we're looking at the bull run of 2016, 2017, January being roughly here. Again, you had a roughly 50-day downtrend, and this bullish hammer had a repulsion factor from this monthly 10, and you could then interpret that as being the bottom of a downtrend because of this repulsion from the monthly 10 EMA, and then continuation happened. This long-legged doji would have insinuated a potential reversal, which would have required a retest of this 10, but it did not happen at that time. So these candles aren't the be-all end-all, which is why you mix in lower time frames to add extra confirmation to what you're seeing. No indicators are perfect. This candle right here was a dragonfly doji, which I think Bitcoin has a chance of forming, but in a bullish sense. However, because of this massive uptrend with 18 months without touching the master EMA of this time frame, even though it looked like it had a repulsion factor from the 10 EMA, those 18 months without that retest would have made me interpret that the buyers did step in, but they're probably worn out and it's more of an indecision candle. And because it's been so long since that EMA had been retested after such a big uptrend, I would have interpreted it as roughly a 60-40, mostly bearish. 2019 run up from 3,200 to 14K, you had a bearish spinning top near the top of a run with a large distance away from the 10 EMA. Very bearish sign, independent of the color. It could be green or red, doesn't matter. Then because candles closed below the monthly 10 EMA, you had a run up with a shooting star candle, which is pretty similar to an inverted hammer. But because it's at the top of this formation, I would call it a shooting star candle. And with the recent closure, I would interpret that as a dead cat bounce. And look what happened. So did other people. Look at that. That was coronavirus. So these candles right here were a little tricky because you technically did have a pretty solid run up. So you can interpret this as an aggressive uptrend. And this spinning top candle would be interpreted as bearish because the prior 100 and something else days were a strong uptrend. So this candle here would have been a bearish spinning top. But what happened? You can zoom out and see this as one massive consolidation. And within the consolidation interpretation, this hammer candle right here, I'm going to zoom in, had the repulsive effect from the 10 EMA, which in this context, I would have interpreted as mostly bullish. Therefore, I labeled it hammer candle neutral. The run up from roughly 11K to 64K, the finale ended with a bearish spinning top. A spinning top during a downtrend can often indicate a reversal is in play, and it technically nailed it. So spinning tops are not always bearish, not always bullish. It just matters if it's near the top of a run or near the bottom of a drop. And that candle was correctly interpreted, and a strong move thereafter did take play. So now you can interpret all of this as a consolidation. Therefore, the interpretation of candles is more strongly suited in comparison to how it touches or interacts with this 10 EMA, as opposed to the distance from the EMA because it's not a big drop, it's not a big run. So if price can close this month way up here and create a dragonfly doji, similar to the one from 2017 at the top, which was after 18 months of never touching the monthly 10 EMA, I would interpret that as a repulsive factor because this wick down here, or some people call shadow, this wick will become longer and the candle body will get thinner, and that would be repulsion from the monthly 10 EMA. But that also might happen next month because what do we have coming up at the end of the year? What often happens at the end of the year? Well, not often, 100% of time. Roughly a 30% or greater correction has happened 100% of all New Year's. So I'm going to dive back into the lower time frames, show you what I might guess would happen and how that could create a dragonfly bullish doji the next month. These two vertical white lines mark the 1st of January and the 1st of February because we're on the 4-hour chart, and to interpret what movement on the 4-hour chart would do at the closures of the monthly candles here, we'll be able to make our best guesses of price and then interpret, because these lines are here, what the monthly candles will be doing. So let's say price is able to break out of here and march up to here, get a little bit baby rejection, and the New Year sell-off happens. Price might go all the way down to 39 to 38K to the 3/8 line, and then march right back up and close roughly where it started the previous month on that white line. Now let's look at what that would mean on the monthly chart. That would mean this candle turns more into a hammer candle because price comes right up to here, leaving this much of a body and that much of a long wick. Moving on to the month of January, in this slot here, price would start at this level, have a New Year's sell-off, potentially all the way down to 38K, come back up and close roughly where it started on February 1st. And that would leave you with a January candle, something like this, which would leave you with 2 candles in a row offering massive repulsion off of that red line, and 2 potentially bullish interpreted candles in a row, specific to being in a range and not in a strong uptrend or downtrend. Click this video if you want to learn how to set up a chart just like mine. And click this video if you want to see other signs of Bitcoin and crypto hopium that I did not cover within this video. And if you're new to my channel, what are you doing? Click the circle here in the middle. You just got Timified worldwide. Peace.